Business Report.
Good evening. Tonight, even if pent-up demand eases, it is anticipated that Sri Lanka's car imports will surpass $1 billion for the second year in a row in 2026. President Donald Trump has removed duties on a variety of imported food items, such as spices, coconut products, and bagged tea, weighing less than 3 kilograms. CSE saw a little decline today due to a profit-taking by investors. On a turnover of 4.4 billion rupees, the ASPI fell 0.01% to 23,223.68 and the S&P SL20 fell 0.40% to 6,410. And Asian stocks market traded cautiously today as investors anticipated corporate earnings and critical US economic data.
From Studio 24C, here's Prashansa Gunawardena.
Good evening and welcome to the Nightly Business Report on Other Derana News Channel. Sri Lanka's vehicle imports are projected to exceed $1 billion for the second consecutive year in 2026, even as pent-up demand eases, with tax revenue from these imports expected to reach 550 billion rupees.
Sri Lanka's vehicle import tax revenue is expected to reach 550 billion rupees in 2026, down from an estimated 650 billion rupees in 2025, according to the COPF report on Budget 2026. The Ministry of Finance had initially projected 450 billion rupees in vehicle taxes for 2025, but actual collections are significantly higher due to strong import activity. By late October, about $1.8 billion in vehicle import LCs were opened, with $1.2 billion already cleared, some of which may be finalized in 2026. The report noted that around 71% of the 1 trillion rupee increase in overall tax revenue is attributed to higher duties, VAT, excise, luxury vehicle taxes, and vehicle entitlement levies.
The Sri Lanka Export Development Board and the Sri Lanka Institute of Marketing have signed a Memorandum of Understanding to jointly organize Sri Lanka Expo 2026. The MOU was signed by EDB Chairman Mangala Wijayasinghe and SLIM President Professor Jayantha Devasiri at the EDB head office. Scheduled for June 2026 at the Bandaranaike Memorial International Conference Hall, the 4-day event will showcase Sri Lanka's industries, products, and investment opportunities to global markets. The expo is expected to host 750 exporters and 1,500 international buyers, investors, and journalists. Under the partnership, SLIM will provide branding, marketing, and consultancy support free of charge to ensure the event's success. Officials said the collaboration will strengthen Sri Lanka's international trade presence and create valuable networking opportunities for local exporters. President Donald Trump has lifted tariffs on a wide range of imported food items, including spices, coconut products, and packaged tea, under 3 kilograms through a new executive order aimed at reducing import barriers.
President Donald Trump has removed reciprocal tariffs on a range of agricultural and food products through a new executive order. The order states that certain qualifying items, including coffee, tea, tropical fruits, cocoa, spices, and several other foods, will no longer be subject to the tariffs imposed under Executive Order 14257. Trump said he had determined that these products should be exempt from reciprocal tariffs due to progress in trade negotiations and current domestic needs. Sri Lanka had earlier negotiated a reduction of these tariffs from 44% to 20%. A White House fact sheet explained that the modification follows significant advances in reciprocal trade talks, including multiple framework and final agreements. The fact sheet also noted that some goods remain subject to tariffs, while others have been newly added or removed from the exemption list.
Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Sri Lanka's Colombo Stock Exchange edged lower today as investors engaged in profit-taking. The ASPI slipped 0.01% to 23,223.68, while the S&P SL20 declined 0.40% to 6,410 on a turnover of 4.4 billion rupees. For further insights on this, we have Salama Sanun from First Capital Holdings.
Thank you, Prashansa. The Colombo Stock Exchange started the week off on a bleak tone as it continued its decline, which was observed over the past few sessions. The all-share price index fell by 236 points and closed at 23,224. The index faced a great degree of volatility today as it dropped early on and rebounded for a while, after which it gradually started to drop again and ended with a steep fall towards the close. Selinco Holdings, Senkatagala Finance Company, Bukit Dara, Commercial Bank and Sampath Bank emerged as the top negative contributors to the index. Both retail and high net worth investors were moderately engaged today with a profit-taking sentiment, especially in banking sector counters. Daily turnover stood at 4.5 billion rupees, reflecting a 35% decline compared to the monthly average of 6.8 billion rupees. On a sectoral basis, the banking sector dominated activity, accounting for 19% of total turnover, followed by the capital goods sector and the food, beverage and tobacco sector, which collectively contributed 38%. The top three price gainers were York Arcade, Serendi Bland and Royal Palms Beach Hotel, whereas the top three price losers were SMB Finance Non-Voting, Industrial Asphalts and Selinco Holdings Voting. Thank you.
The Colombo Stock Exchange opened the week in red, reflecting cautious investor sentiment. Profit-taking in key blue-chip stocks weighed on the indices, while trading volumes remain moderate. Analysts expect the market to stabilize later in the week as investors digest corporate earnings and economic data. For further insights on this, we have Shahana Kanagaratnam from First Capital Holdings.
Thank you, Prashansa. The all-share price index extended its profit-taking trend from the previous week, declining by 236 points and closing at 23,224. The moderation comes in with the market surpassing the 23,600 mark, a new historical high last week, which subsequently prompted investors to lock in gains after the strong upward momentum. Given the elevated valuations and recent rapid appreciation, this profit-taking phase is likely to persist throughout most of the week as market participants rebalance portfolios and assess short-term market risks. Market activity is expected to remain relatively steady, with daily turnover projected in the range of Rs 5 to 6 billion, reflecting sustained investor participation despite short-term corrective movement. From a sectoral standpoint, investor attention is anticipated to remain focused on banking, capital goods and diversified financial sectors. These segments continue to draw interest due to their earnings prospects, exposure to improving macroeconomic conditions and stability. Thank you.
Gold prices remained steady today as investors awaited a series of U.S. economic data for clues on the Federal Reserve's interest rate trajectory. Spot gold held $4,078.44 per ounce, while U.S. coal futures for December delivery fell 0.4% to $4,080 per ounce. Prices had dropped more than 2% in the previous session due to reduced expectations of the Fed rate cuts. Investors continued buying gold as a hedge against market uncertainty, offsetting some pressure from a strong US dollar, according to Carlo Alberto Di Casa, an external analyst at Swissquote. The dollar index extended gains for a second consecutive session, making dollar-priced bullion more expensive for other currency holders. Markets will closely watch the delayed September non-farm payrolls report due Thursday for signs of US economic strength. Oil prices fell in early Asian trade today, reversing last week's gains as loadings resumed at the key Russian export hub. Brent crude futures dropped 0.9% to $63.81 a barrel, while US West Texas Intermediate crude fell 1.0% to $59.50 a barrel. Both benchmarks had risen more than 2% on Friday after a two-day suspension, and a nearby Caspian pipeline consortium terminal affecting about 2% of global supply. Novorossiysk port resumed oil loadings on Sunday, according to industry sources and LSEG data. However, Ukraine's intensified attacks on Russian oil infrastructure remain a concern for potential disruptions. Recently, Ukraine struck Russia's oil refineries, highlighting ongoing regional tensions affecting energy markets. The Sri Lankan rupee continued its decline against the US dollar today, extending losses from last Friday. According to the Central Bank of Sri Lanka, the buying rate of the US dollar rose from 301 rupees and 91 cents to 303 rupees and 15 cents. Similarly, the selling rate of the rupee increased from 309 rupees and 61 cents to 310 rupees and 85 cents. Let's take a closer look on how the Sri Lankan rupee is performing against other major global currencies. Short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. JF Packaging Limited shares to begin trading on CSE under symbol JFP-N-000 following successful IPO. The listing comes after completion of share allotments and regulatory approvals from the CSE and SEC.
JF Packaging Limited will commence trading on the Colombo Stock Exchange on the 19th of November under the symbol JFPN0000. The company's IPO, which opened on the 30th of October, offered 51,724,144 ordinary voting shares at 11.60 rupees per share, aiming to raise 600 million rupees. The issue was heavily oversubscribed within hours, receiving total subscriptions worth of 3.78 billion rupees, representing an oversubscription factor of 6.3 times. JF Packaging Managing Director KP David described the listing as a significant milestone in the company's growth journey and reaffirmed its commitment to delivering value to stakeholders. Proceeds from the IPO will be used to settle selected term loans and partially repay revolving import loans, reducing finance costs and strengthening the balance sheet. The company is a market leader in high-quality flexible packaging, supplying to multinational and leading FMCG brands.
The David Perry's Group has announced a strategic partnership with Helago, the ride-hailing platform launched under the Helakuru Super app. The agreement was signed between David Perry's Motor Company Lanka Limited and Helago at the group's head office in Battaramulla. This collaboration aims to advance a fair, transparent and locally empowered mobility ecosystem in Sri Lanka. Helago introduces a demand and supply-driven pricing model that ensures fair earnings for drivers and informed choices for passengers. The platform also supports multiple payment options, including cash cards, HelaPay. With millions of Helakuru users, Helago is poised for rapid nationwide adoption. Aiken Spence PLC posts stronger Q2 FY 2025-2026 results, with the net revenue up 5.5% and profits surging 54%. Operating income turned positive at 21.2 million rupees compared with a loss of 808 million rupees last year.
Tourism remained the largest contributor to Aiken Spence PLC's revenue, generating 64.3% of group sales, followed by maritime and freight logistics at 19.4% and strategic investments at 13.9%. The maritime and freight logistics sector led group profit during the first half, posting 2.2 billion rupees, despite a slight dip due to lower contributions from South Asian equity accounted investees. The tourism sector delivered 686.1 million rupees in profit, an 86.5% increase from last year, supported by strong occupancy and higher room rates in Sri Lanka and steady results from international hotels. Strategic investments contributed to 352.6 million rupees in profit, boosted by a twofold increase from the printing segment. The garment segment faced challenges amid global economic pressures but remains crucial to the group's long-term growth strategy.
The Bank of Ceylon served as the official banking partner of the World Marketing Forum 2025, organized by the Sri Lanka Institute of Marketing. The global event, hosted for the first time in Sri Lanka, took place at the Mount Lavinia Hotel and welcomed over 150 delegates from 40 countries. Distinguished representatives from the Asian Marketing Federation, Asia Small Business Federation and World Marketing Forum attended the forum. Kavinda Dizoisa, chairman of Bank of Ceylon, delivered the keynote address under the theme "Marketing Drives National Competence and Growth." He highlighted marketing's role in strengthening national economies, fostering innovation and enhancing competitiveness. The forum also offered a platform to share global best practices, create connectivity and provide learning opportunities for SME and MSME sectors in Sri Lanka. Sri Lanka Telecom Group posts strong Q3 results with net profit doubling to 2.2 billion rupees on a lower finance costs and improved operations.
Pre-tax profit jumped 93%, supported by a 24.2% reduction in group-level finance costs due to effective debt management strategies. Mobitel emerged as the standout performer, posting a net profit of 639 million rupees, a remarkable 3,660% increase from 17 million last year, driven by stronger network performance and cost discipline. SLT PLC also improved, recording a profit of 1.4 billion rupees, up 53% year-on-year. Group revenue rose modestly by 3.3% to 29.5 billion rupees, with Mobitel revenue up 4% and SLT revenue increasing 1.7% due to broadband and enterprise demand. Operating profit climbed 18.6%, aided by a 3.8% reduction in direct costs. For the 9 months ending September, group profit after tax reached 6.5 billion rupees, with Mobitel reversing its prior loss to report 1.7 billion rupees in cumulative profit.
Abans PLC, in partnership with Xiaomi, officially launched the nation's first experiential smart tech village, MI Abans Smartverse, at Colombo City Centre. The opening was attended by Xiaomi brand principals, including regional manager Luther Liu, country head Kain Wang, AIoT head Vanessa Ma, along with Abans management, media influencers and technology enthusiasts. The Smartverse provided an immersive experience showcasing Xiaomi's ecosystem of smart home products, electronics and lifestyle solutions, with interactive zones demonstrating AI-driven home automation, entertainment systems and smart appliances. Visitors also enjoyed an AR zone featuring Xiaomi's latest mobile phones and appliances, along with games and activities, promoting the brand. Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Asia stock markets traded cautiously today as investors awaited corporate earnings and key US economic data. The focus remained on the interest rate outlook and developments in artificial intelligence stocks. Japan's Nikkei index remained flat, while tourism and retail sectors fell sharply following China's warning against travel to Japan amid a deepening diplomatic dispute. Department store operator Eastern Mitsubishi and cosmetics maker Shiseido both dropped around 10% in Australia. BHP shares fell 0.7% after Britain's High Court found the company liable for a dam collapse in Brazil. This decline contributed to the Australian bourse hitting a 4-month low. Samsung Electronics, Hyundai Motor and other major South Korean manufacturers unveiled domestic investment plans after US trade deal raised concern investment in America could weaken manufacturing at home.
Samsung says it will invest hundreds of billions of dollars at home and expand its chip-making capacity amid the global boom in artificial intelligence. Samsung and Hyundai were among major South Korean companies to announce domestic investment plans on Sunday after a US trade deal with South Korea sparked worries that it may weaken local manufacturing. The deal, finalized on Friday, includes a pledge by the country to invest $350 billion in U.S. strategic sectors. In a meeting with business leaders on Sunday, South Korea's President Lee Jae-myung said he was concerned that pledge may lead to domestic investment shrinking. He asked the companies to consider putting more money into their home country and suggested they consult with the government to make effective use of the $350 billion U.S. investment package. As part of Samsung's plan to invest some $310 billion at home over the next 5 years, its electronics arm said it will add a chip production line at its complex in Pyeongtaek. The P5 plant production line has been delayed since late 2023 amid slowing demand for chips for smartphones and PCs and oversupply, according to public company filings. But a global rush for AI chips has tightened supply, with semiconductor prices now surging. Samsung Electronics this month raised prices of certain memory chips by as much as 60% compared to September, sources told Reuters. Samsung said mass production at the plant, part of the world's biggest chip complex, will begin in 2028.
Thank you for watching the Nightly Business Report on Other Derana News channel. We value your opinion. Share your thoughts and feedback with us through email at feedback.adncenglish@derana.lk or via WhatsApp at 076805793. We will see you again tomorrow with the latest updates in the business globe. Vinod Vadansuri will join you next with Other Derana Sports Central. Until then, I'm Prashansa Gunawardana. Thank you for watching and have a good night.